Well, joining us now for some market strategy is Aaron Smith. He's Managing Director of Superfund Financial here in Singapore, and in Copenhagen, Christian Blaabjerg, market strategist at Saxo Bank, joins us there. Gentlemen, thank you for joining us on the program today. Aaron, let me start off with you first. So we're getting comments out today from Dominic Strauss-Kahn, the head of the IMF, saying that the pace of the banking sector cleanup is not happening fast enough, and that stimulus measures are not also occurring fast enough. From your position looking at the financial sector, do you think that is going to continue to weigh on the equity markets if this pace isn't fast enough?
Well, the stimulus package that's going to be signed by President Obama today could give a little bit of temporary relief to the market conditions, and the overall pessimism could lead to what we think of as a bear market rally. However, the long-term prognosis is quite negative. We know that the U.S. Treasury is going to have to borrow another $2.5 trillion this year, and where is all this money coming from? So at the end of the day, you have to think, with all of these bailout packages, who's actually paying the tab for this, and that's the U.S. taxpayer. And
Christian, when you look at what's been done so far to help clean up the banking sector in not just the United States but globally as well, are you satisfied that, or the market's satisfied, I should say, that we are progressing nicely on that front?
Well, you can sort of divide the world into parts, and if you take the U.S. part, I mean, the cleanup is progressing according to plan. But if you look in European banks, there is still a major cleanup. Just compare the write-downs. The U.S. banks has written down $794 billion of their assets, while European banks has only written off $294. So there's a sort of a lag in European banks, plus the very fact that has been rumoring for some while and displayed in various papers yesterday and last week, that European banks are major exposures towards Eastern Europe, and as such there is around $2,300 billion standing out here in debt that most European countries, Eastern European countries, will only be able to pay off. Well, the default rate will be significantly high on this, and it will hit Western European banks.
Christian, I want to talk about the automakers. Of course, the banks, the banks and the automakers seem to go hand in hand. I'm sorry to change the subject, but we don't have a ton of time. We obviously have GM and Chrysler submitting their restructuring plans. I think a total of $7 billion is what they want. Is this wasted taxpayer money here in the States when they probably will go bankrupt anyway?
Well, if you look at it from a purely economic perspective and leaving aside all political impact, it is a waste of money. The assumptions in the plan that the GM is going to have the sales increased over the next 5 years by 3% each year, that's pretty unrealistic, taking into consideration that the last 5 years average increase in sales has been 0.6%. And in this environment, nobody's going to buy cars unless they really need one. So the point is that the assumptions in the plan is quite unrealistic, and as such, it is a bad investment from U.S. taxpayers' view.
Aaron, any opinion on the automakers from a global perspective or a local one?
Well, certainly. When I was in Detroit about a month ago, I couldn't believe how bearish the sentiment there was out there. I wonder whatever happened to Adam Smith and the Wealth of Nations and the thinking that goes that, if you were to let one of these companies go, actually in the long run it would be better off for the auto industry. I heard a statistic that there's actually more than 2 cars for every American in the United States. This is not a problem that the U.S. government can just spend its way out of.
Well, they need to come up with a long-defined restructuring plan. I'm interested, Aaron, just looking at your notes here. You say a lot of people are in gold, but they don't quite know why, and cash isn't the place to be. Why?
Sure. Well, people think of gold traditionally as a commodity or as a piece of jewelry. We think of gold as actually the ultimate form of cash, or a great alternative to cash. You could buy gold or silver as an alternative or a complement to a cash portfolio. Actually, at Superfund in 2005, Christian Baja launched the world's first gold-denominated fund. So it's actually priced in ounces of gold, because this is the world's oldest and longest-standing currency out there. So gold has a long way to go. Certainly it could be volatile, but we think it can go to $1,500 per ounce. Certainly our prospects for silver are even more bullish than that, but of course with a higher volatility. And but gold is a safe haven and the currency of choice, I would say, going forward.
Christian, Aaron thinks as well, actually, I'm just looking at his notes, he thinks the defensive sector is a little bit overbought. Would you be wary of the prices of the defensive sector or not?
Well, as such, I would stay off equity markets if I did not have the possibility of go short. Of course, the defensive sectors is overbought. I mean, it's been going on for a while. This buying up in defensive sectors, utilities, pharma. But as such, I mean, if you look within equities, that is what you can do if you don't want to be outright short.
Okay, gents, we're going to have to leave it there. Thanks very much, Steve, for joining us. Christian Blaabjerg and Aaron Smith joining us from the Superfund Financial, and Christian, of course, is from Saxo Bank.